evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 6th of July, 2021, after the holiday weekend and holiday Monday. So we're back to work on Tuesday here with a pullback. You might not feel like it because the S&P was only down 0.3%. The Nasdaq actually made a new all-time high. We'll come back to that in a second. The Dow was down about 1%, and the weakest stock, or the weakest stock index today, was the Russell, and it was down 1.5%, a little more than that, a little bit under 2% at mid-session. And the sector leaders, or we'll start with the laggards, is financials. That was down about, we'll actually pull the financial sector up, and it's well off that high. It's down 1.5%, followed by energy. And energy is actually the biggest decliner in today's session, and that put pressure together on the Russell. And other than that, there was a little bit of a pullback in material stocks, XLB, but other than that, and industrials, about 1%. But outside of that, look at where the green was. The green was centered on the technology sector, and this is where it's going to get interesting, the consumer, discretionary, or retail sector, because that is where Amazon finds its place in that broader ETF. We might think of Amazon as a tech name, but it does fall technically under the consumer discretionary. Now, this is the market. It's a tale of two markets, and that continues to be the case. If you looked at the financial sector, and we'll take a look at how broad the financial sector is, and for quick reference, this is the Market Watch tab, heat map, and the S&P 500. Weakest sector of the day was financials, followed up actually energy, then financials in terms of percent loss. And outside of that, industrials, materials, but look how small the material sector is in the context of the broader S&P. You can fit just about that entire material sector 4 times into Amazon, which is part of the discretionary. Now, this is the big one because this is information technology and communication services. Put them all together, they are the technology sector. And that is the broader market. And while everything, almost everything except real estate and utilities were down on today's session with a pullback, the big thing was Amazon and to an extent Apple and Google and Nvidia. They were enough, despite all the red, to hold the market into a stalemate or a draw by the close. That was not true in the Nasdaq, which you see the color strength or intensity. Amazon is a large market cap stock, and it does influence the Nasdaq. And so with everything under the sun, and many stocks, including Tesla and Facebook, negative, we had a positive Nasdaq. But not to be outdone, this is the Russell. We don't have that type of market cap domination as we do in the S&P and the Nasdaq. So if you are trading the Russell, it is highly influenced by right here, the financial sector, and then all the others. You can see how that plays into today's session. Now, that being said, that's the start of the discussion. Next up, because crude oil is a commodity that tends to be following or positively correlated to the stock market or the economy. When the economy does well, crude oil does well. If it pulls back or retraces, there's a pullback in the economy, you'll see crude follow the stock market. And with the equity pullback today, we don't have anything with sectors, we just have crude oil. And it was down almost 2% by the close. Outside of that, the bond market was up 1%. This is TLT, ZB, which is a 30-year bond, and ZN, the 10-year note. All of those are pushing up off the lows. Now, that is what you would expect in an environment, as we've been discussing. When the bond market has a decent shot to rally higher, the equity market has a decent shot to pull back or to retrace. I am not calling it the top or anything close to that, but just highlighting short-term opportunities. And those would be, as I like to refer to them, as rubber band snapbacks. A market overbought for a series of days, that tends to drift the market higher. We see examples of that. We see it there. We see a couple just to the upside, we're talking about here. And we saw it here in the holiday drift. But the next phase, the next segment, or the next swing of the market tends to be a pullback. Not the top, but a decent shot to play puts or to play spreads or other type of bearish short-term positions. It did take some patience, but nevertheless, it's tempting to say that that pullback is all we get, but we do look for the market to pull back a little deeper than this, and that will be the challenge and the opportunity of this week, which is this all we got, or is this a little deeper pullback similar to other examples? And that will be what your trades play. Now, the thing that spurred the market higher was the breakout in Amazon that was spurred on a rally Friday that led to a trend day and a breakout on the daily chart, but also on the weekly. So now we see the consolidation or range contraction last just over a year in 2019 and beyond. And that's similar, I'll actually zoom in on that because that is a box, volatility box or range box, 2,000 and 1,500 for Amazon shares. The middle was about 1,750. And we got the breakout, and that breakout led to a new leg or a range expansion play to set up this current volatility box or rectangle, or 3,500 at the top and 3,000 at the lower bound, making about 3,250 the midpoint or fair valuation until today, when Amazon shares broke to the upside and then caught a bid and an extended rally. Back to our Market Watch tab in the S&P 500, that was sufficient to, I don't want to say negate or balance completely, but it did have a major effect. Not just Amazon, but Apple and Google and Nvidia. These actually are the names that were strong today in the S&P 100. Now that, along with Amazon, did negate the bearishness across the board. That's why you had weakness in stocks, bare volume, but at the end of the session, the S&P was not down 100 or 50 or 70 or even 20 points. It ended the session down about 12. And again, the Nasdaq was positive. I like to show stocks making new 52-week highs, and this is a little surprising. I did not expect to see this, and that is exactly why we look at these data. Because 50 on a session where the market pulled back, retraced down, most indices finished in the red. 50 stocks in the S&P 100 made new 52-week highs per the thinkorswim scan. And that's a little bit strange, but let's take a look at some of them and explain why. And you can see that that is in part why the Nasdaq was pushed or pulled to the upside, because Microsoft, we're sorting these by market cap, and market cap has a large weight on how the points move in the S&P and the Nasdaq. Microsoft made the list of a new 52-week high. That's an all-time high. Amazon, same structure. Google, Facebook, Nvidia, Visa, Adobe, Nike, Danaher, Costco, and on. And we'll just take a look at some of them before the video ends. We'll do the weekly chart here, and I'll do the daily chart on this side, and that way we can get a quick comparison. And I'll again go down the list of Microsoft. That continues to extend the uptrend, continues to extend this long-term bull structure and higher highs, higher lows. Again, this is not a time to get bullish. It's actually more a time to get bearish short-term, just to play for a pullback or retracement. And that can be done with any number of strategies, including just long puts. We might prefer a put spread or other type of strategies with the option market that does play for a downside edge or a downside move. And that would target in the future the 250 or that level per share. But again, we cannot let this sneak us by that Microsoft extended to another new 52-week high. And maybe more shocking, Amazon did. That was the headline stock of the day, but there it is on the weekly chart and the daily for the breakout from the range. Google or Alphabet similarly continues this strong weekly chart uptrend, and the Friday into Monday into Tuesday technically rally to new highs. Facebook again is a sneaker stock, or a stock that is sneaking to the upside. We don't see lots of bullish headlines, but nevertheless, the price is sneaking its way to the upside. And Nvidia that is one that's playing on a split. So we are going to get that 4-to-1 split on July 20th, which is right here. And the market has rallied up in anticipation of, or for whatever reason, but this has caught a bid. This is similar to Apple and Tesla pre-split. Whatever the reason is, that stock is catching a rally and a breakout to new highs. Again, this is best traded on the short term to the downside, but only for a pullback. Again, thinking edge. And we'll look at Adobe, which similarly to NVIDIA has extended that run. And that's that concept we teach at TheoTrade, which is markets go, or price goes, between periods of range contraction, which is right here, into range expansion, which is right there. Markets spend a lot more time ranging or consolidating, playing the opposite edge of that value area than it does trending or breaking out. But nevertheless, these are the stocks powering the Nasdaq to the upside, pulling the S&P with it. But the Russell, and to an extent the Dow mini futures, are not quite participating. So it is not all bullish, but there are some names that are strong that we cannot let slip by our radar. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for July 6th, 2021.